Well, hi guys, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. Thursday morning, lots of global cues to digest. Of course, the all-important decision by US Federal Reserve and what the future rate hike trajectory looks like. We'll be discussing that with a big global voice later in the show. And of course, we'll also be discussing lots of stocks, including the likes of Tata Steel, Tata Motors, Hero MotoCorp, as well as Britannia. And of course, if you have any stock-related queries, send them in to us on our YouTube feed and we'll try and take them up with our technical expert on the show. But before we go any further, here's a look at the top stories at this hour. Wall Street kicks off November on a strong note. The US Fed leaves interest rates unchanged for the second time. Chairman Jerome Powell does not rule out further rate hikes with inflation still above the 2% target, although the committee has upgraded its assessment of the US economy. Asian markets too surge after the US Fed holds interest rates. The GIFT Nifty is suggesting a higher start for the Indian market. Last time I checked, the GIFT Nifty was trading above that 19,200 mark. Crude prices hover around the $85 a barrel mark as the market remains on edge amid the Israel-Gaza conflict. Gold sees some cuts but continues to trade near the $2,000 mark as the Fed keeps interest rates steady. Weakness in European business takes the shine off Tata Steel's Q2 earnings. Meanwhile, Britannia's revenue growth misses expectations, but the FMCG firm's margins see a sharp expansion. Hero Moto, meanwhile, meets estimates in a good quarter, and the management is optimistic about the growth momentum going ahead. And in key earnings today, we will be tracking Tata Motors that's likely to deliver a steady growth even amidst a mixed performance from the India business. Adani Enterprises and Dabur as well as Godrej Properties will be the other results to track today. Well, as I was mentioning that, the US Federal Reserve has maintained interest rates this time around for a second time and has kept it around that 5.25 to 5.5% mark. Let's listen in to what the Chairman Jerome Powell had to say in the press conference after the announcement of the interest rate decision.
It would come very far with this rate hiking cycle, very far. And you saw the spread at the September meeting of, it's a relatively small spread of people think one or two additional hikes. So you're close to the end of the cycle. That was an impression a belief as of September. It's not a promise or a plan of the future.
Well, those are the comments coming in from Jerome Powell post the declaration of the rate decision. But let me also bring on board Edward Yardeni, who's the president of Yardeni Research, joining in to understand what the Fed's tone really means this time around. Great to have you on the show, Ed. First of all, I want to get in your thoughts on what do you make of the comments, given by Jerome Powell, given the fact that it's the second time the central bank has held on to interest rates. But do you think this is the much-awaited pivot that the market was really waiting for?
Yes, I think so. The market was anticipating that the Fed would pause. I think the market's anticipating that perhaps the Fed is not going to be raising interest rates any further, and that sometime next year we'll get at least one, if not two, rate cuts. So the market clearly was doing quite well before the press conference that Mr. Powell had, partly because the Treasury announced that they would be raising less in the Treasury notes and bonds segment and more in the bills. And we also had some weak data that also rallied the bond market. So I think what we've just discovered is that there are buyers when the bond yield gets to 5%, and maybe we are not going to see bond yields go any higher.
Right. Powell also mentioned that they're not even discussing rate cuts at the current juncture. But the Fed has noted that both credit and financial conditions have tightened with, of course, as you mentioned, US yields hovering near 5% mark. Do you think a rate cut could in fact come in before June? That's something that the markets are anticipating. But do you think April is the time one could look at when it comes to a rate cut from the Fed? Or do you think that will be a bit too optimistic?
Yeah, I think you don't have to expect rate cuts to be optimistic here. All you have to do is be empirical and see that the economy has been resilient. It's actually done remarkably well in the face of over a 500 basis point increase in short-term rates and long-term rates. And so it's conceivable that the economy's got some resilience in it that'll continue into next year, and that rates do stay higher for longer, and it's not a disaster. It's not a terrible situation. Quite the opposite. it shows that we're back to normal. I mean, we were on the 10-year bond yield between 4.5% and 5% before the great financial crisis, before everything turned abnormal.
Right. I also want to get in your thoughts on the inflation outlook. Of course, the Fed has said that, there's a long way to go before we achieve that 2% target. 3.7% is where it's hovering at the current juncture. But given the fact that there's so much strength in the US economy, do you think there is a possibility that inflation could once again perhaps edge higher going forward?
I'm not in that camp. I know that a lot of people are worrying that this could wind up being a repeat of the 1970s. And there are a lot of similarities, of course. The geopolitical situation is reminiscent of what happened in 1973, 50 years ago. There was a Middle East war, and now we've got another one. So far, the price of oil has stayed down, so we haven't had the oil spike that we had in the 1970s. But I think what's most important here is that productivity, which collapsed during the 1970s, is showing signs of picking up. We have a real serious problem in the labor market. We don't have enough workers, and certainly not enough skilled workers. And I think a lot of companies are concluding they have to use technology to increase the productivity of our labor force.
Right. Let's shift focus to equities then. Of course, October was kind of a brutal month for US equities. We saw, stocks kicking off November on a strong note. But do you think that, going forward, we will see a risk-on sentiment, making a comeback? Given the fact that we've seen what's happening in the Middle East, investors have turned risk off. But going forward, do you think the S&P 500 could, in fact, end the year with solid gains, or do you think it'll be somewhere around the flat line when it comes to the year end?
Yeah, no, I do. At the beginning of the year, I was one of the optimists, one of the bulls, arguing that the S&P 500 would get to 4,600 by the end of the year. I wasn't optimistic enough. It got there by July 31st. And I did think once we got there that we might have a correction, which is what we've had. And now I think we've seen the seasonal pattern playing out to a T, which means that September and October were weak. And now already November is starting off pretty well. So we may be starting our Santa Claus rally actually a bit early.
All right, expecting a Santa Claus rally there. But lastly, I want to get in your thoughts on the emerging market pack, especially India. India, of course, is entering into an election year. How would you advise investors to position themselves as we enter an election year? We have already seen foreign investors turning sellers when it comes to India. What's your outlook there?
Well, I think India stands out in the emerging markets world these days. Clearly, investors are very careful now about investing in China. There's a lot of issues in China. Some of them have to do with the way the government deals with business. Some of them having to do with the bursting of their property bubble. And then, of course, their demographic situation is one where it's aging very rapidly. India, on the other hand, has got a young population, English speaking, rule of law. And as a result of that, I think more investors are now looking at India. And by the way, we're not just talking about equity investors, we're talking about direct investors. We know that manufacturers are moving out of China and into India, Bangladesh, and Vietnam, Mexico. So China's weaknesses are creating some strength for other countries, including India, of course.
Right, that's the view on India, of course, stands out in the emerging market pack. With that, Ed, thanks a lot for taking out time and joining me in, this morning for us. In fact, it's 11 p.m. there, so good night to you. But thanks a lot for taking out time and joining and sharing your thoughts.
All the best.
Thank you. Well, with that, let's shift focus to some market technicals then. Joining me is Kunal Rambhia of the Streets. Great to have you on the show, Kunal. Given the fact that we saw a second day of weakness on the Dalal Street, today the global cues are looking fairly buoyant. We have GIFT Nifty trading above the 19,200 levels. Where do you expect the Nifty to head today? Do you expect levels of somewhere around a good 19,100 or thereabouts? Or would you say that it could remain volatile like it has been over the last few weeks?
Good morning, Nandita. Morning to all our viewers. So if you look at the Nifty, right from the peak level, we saw a correction of almost around 7%. And from the extreme lows, again, we saw a decisive bounce. But I would call this the bounce as a dead cat bounce. The level which we saw recently, just 2 days back, I think 19,200 was the level which we saw on the screen. And again, we tumbled down from the same level. Now this 19,200 to 250 level is the somewhat the support level which markets already broke, and it retested the same. So I think today, in today's trade, we can expect around 19,100 to 150 kind of levels. But unless Nifty claims those 19,250 mark again, I think it would remain sluggish, and sideways kind of momentum may just continue with negative bias. So I would not really be keen to buy on the today's gap up opening. Yeah, we can definitely go stock specific, but not on index.
All right, go stock specific, but not on the index. Of course, dead cat bounce. This was the question I was posing to my, guests on the show on Monday. But yeah, looks like it is a dead cat bounce. But going forward, what about Nifty Bank? It has continued to underperform. What are the levels you'll be watching out for on this index? Day before yesterday, we saw a very strong rebound coming in. We saw the index end near day's highs. But yesterday, again, it came under selling pressure.
Correct. So on the Bank Nifty front, again, the support level was 43,600, which it actually decisively broke and came down to 42,150. Again, a bounce still around 43,400, which we saw. Now in today's session, again, we can see the expect the levels of 43,400, which was just a 2 days back high. In fact, day before yesterday's high. So I think that can serve as a resistance for now. And by any chance Bank Nifty manages to surpass 43,400 on the spot level, then I think the bounce till 44,000 can be expected. But again, it's not the level where we can expect a decisive reversal to come in. I think the consolidation might just come in first.
All right, expect more consolidation on the Nifty Bank going forward. Let's talk about the stock of the day today. Tata Steel reported its numbers post market hours yesterday. Of course, European operations continue to be a drag for the steel maker. It has swung to a loss, and net loss has come in at somewhere around 6,500 crore rupees versus a net profit of nearly 1,300 crore rupees in the previous year. In fact, even the revenue from operations have kind of come in lower compared to last year. Looking at the stock on a 6-month basis has done well, but over the last 1 month we've seen the stock losing sheen. It has been consolidating, has lost somewhere around 10% or thereabouts. Would you advise investors to use these dips and perhaps buy into the counter, or would you say, stay out of the metals pack at the current juncture?
So Nandita, to be very precise on this counter actually declined from 135, and in fact as per yesterday's closing, it was down by almost around 14.5%. Now it's reached the previous bottoms of those 114.15, which we saw somewhere in the month of June and July. I would again wait for this counter to consolidate and then show the reversal, because the immediate trend on the chart is definitely negative. But if I look at the last 2 years perspective trend, then yes, it is positive. So we'll wait for the levels of around say 107 to 8 kind of levels, which is almost 7-8 points lower from the present level. I think at that level we would think of accumulating this counter. But again, we won't really catch the falling knife. I would advise let's wait for the counter to consolidate near 110 mark. Then initiating a buy with the stop loss of 107 would make sense.
All right, advising against catching a falling knife there. So that's the view on Tata Steel. But let's talk about the brokerage call of the day. We have Hero MotoCorp that reported a steady set of numbers yesterday. In fact, even the October sales jumped somewhere around 26% on a YOY basis. But Hero as a stock, Kunal, has come under pressure on and off, given the fact that there has been run-ins with the tax authorities, and that has of course reflected in the stock price as well. What is your call on Hero Moto now? Do you think one should look at it in the two-wheeler space, or would you say stick to a Bajaj Auto?
So again, on the Hero Motor front, if I look at the charts from June 2023 so far, it's very clearly making higher top, higher bottom, but the counter is very much muted. If I look at the recent performance from August till now, it's been almost sideways consolidating. Counter retested the support zone of 3,050 just 2 to 3 days back, and it's trading at right now I think around 3,090-95 levels. So yes, if this counter continues to remain in the bull trend, I think one can initiate a buy with the stop loss of 3,025. Mind you, this might not really give us the quick returns because the trend is positive but very much muted. But with the stop loss of 3,025, one can definitely buy. Bounce till I think around 3,250 kind of levels can be expected. And by any chance, if Hero Motors manages to cross 3,300 mark, then I think a new rally might just emerge on this counter, which is much more awaited. So yes, I'm watching out for this counter, but provided it holds the levels of 3025.
All right, 3025 is the key level to watch out for when it comes to a Hero Motocorp. But let's talk about, since we are talking about the auto pack, let's talk about Tata Motors. Of course, the company will be reporting its second quarter earnings. It may swing to a profit compared to last year. In fact, a strong JLR makes, in fact, and easing chip concerns, some things that could support earnings for this company. But it could surprise positively on the margin front. In fact, BNP Paribas expects margins to jump somewhere around 650 basis points on a YY basis. How would you approach a Tata Motors ahead of the earnings, Kunal?
So, Nandita, again, in the recent times, we saw the correction of almost 8.5%, where the counter tumbled from 680 levels to around 630 levels right now. The immediate support on the chart is 620. Now, again, this counter is positively trending counter, but again, very much muted. If someone wants to accumulate, then one can definitely think of accumulating with the stop loss of 615. Failing to hold this level, I think we can expect the levels of 590 on charts. And on the higher side, immediate breakout is 645. So for the momentum trader, wait for the breakout of 645 and then initiate. If someone wants to play on the risk reward basis, initiate the buy right now with the stop loss of 615.
All right, that's the call on Tata Motors then. But let's take up some viewer queries that are trickling in this morning. Of course, JK Tyre is one stock that's on my list. Strong profit growth, five-fold jump on a YY basis. Strong operating numbers. In fact, revenues have also grown amid a drop in input costs. We have a couple of queries coming in on this stock, JK Tyre. Tyre stocks have been on a roll. We all know that. And, we have two queries coming in, one from Naveen and the other from Debu. Who's a regular on our show with his queries. So what would you advise them to do with this stock, JK Tyre, post earnings? What are the kind of levels one should be watching out for there?
See, again, if we just look at zoom out of the chart and see last 6 to 8 months performance, the counter has been trending counter. It has almost doubled from the lows of March 2023 so far. But now I think somewhere we are witnessing some kind of profit booking also on the chart. So yes, the trend is positive. If the view is positional, certainly one can hold on to the position with the stop loss of 275. But if someone wants to buy new at this point in time, I would not really advise because of unfavorable risk reward ratio. Let the counter cool down a bit near to say 280, 285 levels. One can definitely accumulate. If someone is holding the counter, hold on with the stop loss of 275. I think this trend might just continue. It might just take a little more time to reach the news high, but I think, yeah, the trend might just continue.
All right, the trend may continue, but you may actually look at waiting it out for the stock to cool off. That's the view. But let's take up a few queries on Infosys. A couple of queries. In fact, 2-3 people have sent in queries on this particular stock. Prabhu wants to know whether it's the right time to buy into an Infosys, whereas Vivek Kurup has written in saying that he holds 1,400 shares of Infosys, which he bought at 1355 rupees per share. And he wants to know what should be the target over the next week or so. Infosys post its earnings hasn't really, done all that well. Of course, we know that it has scaled down the upper end of its guidance. But a lot of experts believe that, IT is a pack that could generate alpha over the next 1.5 years or thereabouts. What are your own thoughts? Do you think for the long term, it's the right time to buy? And secondly, if somebody has bought it, what kind of a target should one watch out for over the next week?
See, Nandita, honestly, we are also sailing in the same boat when it comes to generating alpha for IT companies. I think these counters are doing good on the weekly charts. But let's talk about the short term. Now, if the recent corrections we see in the counter came down by, again, almost 11% in the recent correction, if I consider the last previous rally, which started from somewhere on 21st of July, this counter is down about 78% of the previous rally. Yes, it's a good bargain buying opportunity, but again, for the short term, we should give a lot of importance to the trend of the counter. Right now, on the immediate charts, the trend is negative. The support on the chart is, I think, around 1340 to 1335 levels. Keep these levels in mind, and I think the guy who is asking for the short term should maintain the stop loss of 1335. Failing to hold this level, I think one should take an exit. From the positional point of view on the weekly chart, I would really consider this decline to be a bargain buying opportunity. The levels to watch out will be around 1300 levels. I think that can offer a good risk reward ratio also. And one can hold with the target of around 1550 to 1600. But now that's going to be again 3 to 4 months time. Short term ke liye, as of now, it's an exit below 1325, 1330 levels.
1325 to 1330 levels, short term. view is to exit the stock. Hope that answers your query. But let's take up the next one. This one is coming in from Kuntal, and he wants to know your thoughts on BSE. He wants to know the long-term view on BSE. But of course, this stock has seen a multifold jump, on a YTD basis, on a 6-month basis. It has even revised its buyback price, given the fact that it has run up so much. So what is the long-term target on this stock now?
It's the open sky for this counter. In fact, in the recent times, again, from April, we saw the rally from almost 400, 450 levels to 1800 levels. That's a remarkable, crazy rally. But now, at this point in time, if I look at last 2-3 days behavior, it's showing some kind of profit booking also, and that also makes sense. If you're looking at the long-term chart, if you're looking to hold this counter for long, then immediate support on the chart would be, say, 1400 levels. Keep the levels in mind. 1400, if the counter manages to hold above 1400, I think one can keep holding this counter. There is no trouble. This trend might just continue for even longer time. Setting up the target is based on the Fibonacci levels, and I think the targets on the charts were around 1850 to 1900 levels. The high which we witnessed was 1945. So immediate level, the targets are already achieved. In-house view is to book out on the BSE. But if someone wants to play the trend, hold the stop loss of 1400 and hold the position till the time the trend just continues. Keep trailing the stop loss. We don't know what can be the extreme target, but as of now, the in-house view is to book the profit on BSE.
All right, book profits on BSE, that's the call then. The next query is coming in from Yagnesh. He wants to know your long-term and short-term views on a Nestle. Post the stock split announcement, what's your view on this stock?
See, we are very bullish on FMCG peg because the counters are offering risk-reward ratio being favorable, but Nestle is the counter which is trading near to the peak. Again, from the present levels, I think the immediate support is 23,200. I think once it reaches near to this 23,200, I would suggest a buy. But for now, short-term view is being cautious on this. The immediate decline till 23,400 kind of levels is very much likely, which is like 400 to 500 points from the present level, which turns out to around 2%. So not much to worry about if your view is positional on this. Maintain the support level of 23,200. And by any chance, if the counter reaches that level, reapproach our channel again and ask your query. I think that can be good bargain buying, and keep adding this position because the trend is positive. Hold on to the position.
All right, bullish view coming in on Nestle there. But let's take up the last query for the day. Then Zomato. This is one stock that we're getting queries on. Som wants to know your thoughts on whether this is the right time to buy into a Zomato. Of course, earnings are also slated to come out this week itself. So how should one approach this one before the earnings?
See, Nandita, again, the breakout on the chart was at around 72, 73, and since then the counter has been in uptrend. It's making clear higher top, higher bottom formation, but last, I think 2 weeks, the counter is witnessing some kind of profit booking also. I would advise to stay out of this counter. If you're already holding the counter, maintain the stop loss of 100 levels. If the counter fails to hold this level and breaks the 100 mark, I think one should take out the profit from this counter and wait for some kind of correction to come in. New entry, I think one can reevaluate the counter once it reaches near to 85 zone, but not as of now.
All right, you could perhaps look at entering the stock at 85 zone. That's the call on Zomato. With that, we come to the end of this query segment. But Kunal, what are you flagging off for viewers this morning?
So Nandita, there are 3 counters which I have shortlisted. The first is Wipro. Again, just reason being, it's been in sideways consolidation since couple of days and it's showing good strength accumulation happening on the chart. Favorable risk reward ratio. So one can definitely buy Wipro at the present levels, maintain the stop loss of 375. And the first target on this counter can be 395. Keep trailing the stop loss if the target is achieved. The second is Reliance. Again, the way we saw the bounce coming in Reliance, it was really attractive. Someone seems to be accumulating this counter in a big way. I think the stop loss on this counter can be 2275, and the first target on this can be 2375. Mind you, this target is not very short term. You can expect the targets in a week to come. And then the third one is the Stride Pharma. Post the result, we saw the correction on the chart. The counter has come down near to its support level. Good traction is seen on the counter post result again from the extreme low levels. One can initiate a buy with the stop loss of 470, and the first target on this can be 500. And again, all these 3 counters are offering good risk reward ratio. So advisable to hold the position and trail the stop losses once the targets are achieved.
All right, Wipro, Reliance and Strides Pharma, some of the stock recommendations coming in from Kunal. But, on that note, I also want to point out that we had a couple of queries on Wipro as well as Reliance. Hope this kind of gives you an insight into what are the kind of levels you'll be watching out for on these two counters, Wipro and Reliance. But with that, Kunal, thanks a lot for taking our time and joining in and sharing your insights on so many stocks with us. We've come to the end of this edition of Morning Trade. Well, thanks a lot for watching from me and the entire team. But stay tuned because coming up next is Opening Bell.